Good day, traders. Welcome to the weekly market fix. Volatility driven by socio-political uncertainty continues to whipsaw global markets, with the initial knee-jerk reaction somewhat subsiding on Friday. So let's have a look at some of the opportunities that seems to be setting up in the midst of all the chaos. Let's start by having a very quick look at Bitcoin. Bitcoin is still in this downtrend. We are trading below the 21 daily EMA as well as below that 50 daily SMA. We're also trading right up against the monthly pivot from the current month and the new monthly pivot for next month. This was just showing us that we are currently consolidating. At this point, it's possible that we might still get that correction towards our area of our new monthly R1 pivot at about 45,000. That's also where we will find some resistance overhead from the daily 100 SMA. Overall, I do retain the target at 27,000, which is the yearly S1. So at this point, it's just worthwhile to keep an eye on price action to see whether we're going to break above that daily 21 EMA to get a correction towards the highs from about a few weeks ago, or whether we're going to break lower below the new weekly pivot and head towards our bearish target. Having a look now at gold. Gold has briefly, and I'm just going to disable next month's monthly pivots, just so that we don't have all of these lines on the chart. So with gold, we saw this initial rally towards the target area that we've previously identified from the yearly R1 pivot. That was at 1,970. Obviously, we got very strong rejection from that, and currently we are trading back on support from the monthly R2 pivot at 1,885. Overall trend is still up, and I suspect we will probably see a renewed run towards this area of resistance back at the yearly R1 in the week or weeks to come. But we do have some additional support a little bit lower down, as we can see from this area of 1,850 to about 1,870. So it's possible the price might dip down back into this area, but overall trend remains up and the target does remain up here from the yearly R1. Having a look at the NASDAQ has now started triggering what does appear to be a very large head and shoulders pattern. Just looking at the left shoulder, this head, and then the right shoulder over here. We briefly dipped below it on Thursday, but then recovered once again on Friday. However, it does still seem that we might find some resistance from this area at 14,470. And of course, if we do see the price action rejecting from this area, it's possible that we'll start seeing this head and shoulders play out. The target area is at 11,200 with a possibility for this yearly S2 at 10,600 also to be reached. Also worth noting, we do have the yearly pivot at 15,000, which could also still be tested, as that does not invalidate the head and shoulders, because the head and shoulders will only be invalidated once we close above this right shoulder, which is also coinciding with that yearly pivot. Moving on now to our Forex, let's have a look at the GBPCAD. The GBPCAD last week, we had a suspicion that we might break higher towards this projected target area at 1.747. However, at this point, it seems this rising wedge has now concluded and actually broke down, which is giving us a target at least somewhere between last month or the current month's monthly S2 at 1.674. In terms of the breakout area, we had this area at 1.711. So it's possible that we might see a correction this week towards the yearly pivot at 1.720. But again, any bearish rejection from this area would see price continuing to move towards this target area at 1.1674. Looking at the GBPNZD, this one we've previously pointed out, it's possible that we will get this rejection from this yearly R1. And at this point, we are seeing a correction happening. And just looking at our Fibonacci retracement levels, we drew the levels from this low in November last year. towards the highs in February. And what we can see is we are currently approaching that 50% retracement level, coinciding with the daily 100 and daily 200 SMAs at 1.969. So that does remain the more obvious target. We also have the yearly pivot coinciding with the 61.8 Fibonacci retracement level and some additional support. So both these levels are very possible areas of correction, and from there it's possible that we might then see more trend continuation to the upside, but for now the trend does remain down and targets remain to the downside. Finally, let's conclude by looking at a GBPUSD. This one has also broken below what initially seemed to be a symmetrical triangle consolidation. We've seen clear rejection of this area just below our yearly pivot. We're also well below the major moving averages and this diagonal support. We might see a retest of the breakout area at 1.351. This is the area where we have our daily 100 and daily 50 SMAs also converging. In terms of deeper correction, of course, this area remains strong resistance at 1.361, and our target area at this stage remains the lower end of the symmetrical consolidation, also the symmetrical triangle consolidation, and that would be at this area somewhere between I'd say about 1.312 to about maybe 1.320. That's a wrap for this week's video. Remember to tune in throughout the week for our sub 1 minute YouTube shorts. And until next time, we wish you all the best with your trading. And remember, trade smart and trade successful.